Good afternoon, everyone. It's a real pleasure to be here. I'm here to set out why Kindred is in such a strong position in the gambling industry and why we are very confident that we can continue to outperform the market over the next couple of years. This confidence is based on 4 pillars. It's the resilience we get from the balanced market of portfolio. It's the sustainable and robustness of our underlying revenues. It's our relentless focus on profitable growth and our excellence in our underlying commercial operations. My name is Nils Andén. I joined Kindred for the first time in 2006 as employee 142 at the time. Worked in the commercial department, at the end as CMO, and then left for 4 years, worked in the fintech space for 2 years, and I was with Entain for 2 years before I came back to tackle some of the very exciting opportunities that Kindred has today. I'm going to start by giving you a deep dive on our brand and geographical footprint and why our relentless focus on profitable growth has paid off, and I believe will continue to pay off. We will then go into a deep dive, and I will have the assistance of Ania and Neil, my counterpart Chief Commercial Officer for Region 1, which is AJ, and Neil, our General Manager for the UK. That will give you a little bit more flavor how we actually operate in these markets and how the focus on customer management really pays off in the long run. Kindred's current market strategy is really based on a focus on our core markets where we see underlying strong growth still and sustainable regulation. And this is also where we can utilize our strengths as a company. We then subsequently have the ability to take these core assets, then support the expansion into higher growth regulated territories. In this strategy cycle and for the next couple of years, that main focus is North America. We also use a classification framework to ensure that we can optimize both our short and long-term investments on a very agile framework, shifting investments between markets. A good question on this is, of course, other territories. We haven't and we are not ignoring territories like Asia, Latin America, South America, Africa. We're of course evaluating all these territories, but we think at the moment the best place for us is in our core markets because we have enough underlying growth. We're not chasing gray revenues in Asia. We are looking at Africa and South America and Latin America, and as those markets mature, as regulation becomes more sustainable, we will evaluate them and we might look at growth there in a few years' time, either inorganically or organically. We believe strongly in running one global sportsbook brand across all our markets. That means that we can piggyback on the brand value and the synergies we get from both acquisition mechanics and also the way we do our retention marketing. But what we have identified is that we can also complement Unibet in markets with local, hyper-relevant casino brands that can target a slice of the market that Unibet is not targeting at the moment. It also gives us great optionality. We can either acquire a brand like 32Red in the UK or build our own brand on the Kindred platform. We have great examples of Blood Casino in Romania and a few brands in the Nordics which we've had great success with. This is an ideal setup for us. It's not always possible. In France, we don't have an iGaming regulation. In Belgium, there's a limited number of iGaming licenses available, but this is what we aim for. Ultimately, we are a true online company with very little retail baggage, and we have formidable brand awareness in many of the largest gambling markets in the world. This is a fairly exceptional position in our industry. Kindred is the operator in our industry with the most robust and resilient revenue base. And that is because of this broad, diversified balance of our weighted top 10 markets. On the left-hand graph, you have our gross win contribution from all markets over the last 12 months. Our top 4 markets stand for around 55%, and in the last 12 months, we didn't have any market with more than 20% of the overall contribution. Kindred has always focused on robust and sustainable revenues, but how do we achieve this? It is with this distributed profile from a market perspective. It's also from a spread of revenues across all the different value groups in our underlying customer database, and from a balanced type of revenues from the various products that we offer. This has been incredibly powerful over the last 12 years, during which we've seen this ongoing regulation trend and a much stronger focus on customer protection across pretty much all our markets. This balanced portfolio of markets and brands continue to help us navigate this transition to local in-taxed revenues. And as Henrik mentioned, today we are almost at 80% of our total revenues coming from locally taxed and regulated markets. But this balanced portfolio also helps us through short-term regulatory headwinds in particular markets. If one market would dip below expectations in 1 year, we are able to offset that with growth across the portfolio. Our mantra within Kindred really is that the combined contribution is much more important than any single market we operate in. Before we move on, let me just reflect a little bit about Kindred's ability to solve complexity and withstand regulatory headwinds. When I started in 2006, we had one site, a few different languages, but it was basically one site. We had one regulator, we had one set of compliance criteria. As you can imagine, over the last 16 years, a lot has changed in that. Now these headwinds from regulation or compliance or competitive environment can actually sometimes be genuinely positive contributors for us as a company. That's not always the case on a short-term basis, of course, as we've seen in Netherlands most recently this year. But over time, I'm really impressed with Kindred's ability to turn these challenges into positives. They've allowed us to ensure a substantially higher quality of earnings and also to support our ambition to create a safer gambling experience for all our customers. We also have an unusually flexible setup, both in terms of tech and in people operation. That means that we are designed as a business to take advantage of changes in our environment. And after 16 years in this industry, if it's taught me anything, is that more change is coming, and it's going to be complex. Where Kindred wins is really in our core markets. They are our bread and butter. As Henrik mentioned, we have over the last few years focused on our locally regulated market, and that has really driven our ability to outgrow the market. The last 5 years, we've outgrown the market by almost 4 percentage points. And we see this continuing over the next 5 years. We're expecting a fairly strong underlying growth in our core markets of around 7% on a compounded annual level. And our ambition is, of course, to continue to outpace the market. And remember, we've been doing this every year for the last 5 years. It's business as usual for us. And the killer combination of having a strong underlying market growth and our ability to outgrow the market means we have significant room for market share gains over the coming 5 years. But why are we so confident that we can continue on this path? There are, of course, substantially more ingredients in Kindred's recipe for success than 3, but we just want to call out a few. Perhaps the most important one for us is the synergies we are able to create between our locally hyper-relevant teams on the ground and our global hubs of excellence. This is a key differentiator that sets us apart from our international peers. We are able to deliver a diverse brand footprint tailored to each market and localized to make sure we're hyper-relevant everywhere we operate. It might sound easy to say, but it is quite a feat given the complexity that we operate in today. We have huge compliance differences between markets. There are payment preferences that vary. And perhaps most importantly, the customer demands and needs are hugely different, even between 2 adjacent markets within Europe. But we know them all. And this know-how is really what earns us our well-balanced portfolio of regulated markets. You will hear later from Marcus, our CTO. He will give you some details how this actually works in practice and how we manage complexity for our success and how this can actually create barriers to entry. This customer-centric mindset is also how we operate our wider commercial operation. And this started, I would say, around 15 years ago, actually, when we started to see changes in our environment. The media climate has changed hugely in the last 15 years. You now have big global players that didn't exist in the noughties. We got ahead of that, and we have created global centers of excellence that can speak with the global hubs of the likes of YouTube and Facebook and Google to ensure that we get maximum leverage and the maximum ability to utilize those channels. We've also seen the same trend in customer relationship management. There's been a strong trend of underlying automation and some real big technological leaps in the last 10 years in this area. And to really capture that, you need a centralized approach. And for us, it has really unlocked the benefits, as Henrik touched upon earlier as well. So we now have, and we've had for a number of years, centralized marketing expertise in all verticals we operate in. And this expertise then supports the on-the-ground local teams that we also have in all the markets we operate. The global provides the best practice, and the local ensures regional execution and relevance. We've proved that this is the best way to optimize both resource allocation, but also the return on investment on your marketing spend. This, combined with our dedicated performance management function, that drives the wider econometric modeling on return on investment and a very agile allocation between markets in how we invest our money based on payback on a quarterly basis. But this is all well and good, right? But what is the real implication of this? For us, it's basically 2 things that matters. It's our ability to outgrow the market, but also profitable growth in those markets. Let me illustrate. If we dive into the real kind of heart and lungs of our business, you can see that Kindred has been able to outgrow the underlying market in almost all of our core markets over the last 5 years. You have some shining examples of UK, France, Australia, Belgium, and Denmark. But what I want to take away from this slide is not the single market, it's the combination across the board that makes this case so strong. And of course, let me just highlight, we also have Netherlands in the middle here. I know it's high up on everyone's want to know a little bit more list, but we have to wait a little bit longer before AJ comes on stage. But clearly, it's by far our biggest short-term opportunity. Now, growth in itself is good, but as we said, what we are truly passionate about is profitable growth. And you can see our focus on profitable growth when you look at our individual core markets. We deliver positive gross contribution from all our core markets. And as we've seen on the previous slide, we outpace the underlying market growth in most of them. The variance in gross contribution, as you have on the bottom axis, is of course dependent on underlying taxation, regulation, or competitive climate. But as Henrik pointed out, it's also interesting to see that in markets where we are a top 10 operator, not a top 5, we're still able to deliver strong gross contribution margin for the company. You have the UK and Australia as very good examples of this. We like to think that this is really the outcome of the work that I tried to illustrate on the previous slides, the operational excellence from 25 years in this industry, the very careful econometric modeling we do to ensure we get better return on our marketing spend than our competitors, and the overall focus on sustainable revenue.